So I've been reading the news about Capital One buying Discover and, just trying to figure out whether this is a good thing or a bad thing, mainly for businesses, obviously, because I'm helping you guys out with your payment processing. So I want to kind of see what kind of impact this has on business owners and them accepting credit cards. So I wanted to share a quick few thoughts with you before I get started on my workout. So I'll be quick. First, in the interim, within the next 12 to 18 months, nothing's going to happen because it's going to take a while for this deal to get approved and then the mergers to go through and so on and so forth. So, nothing really in the immediate future. Now, once this deal does get approved and it does go through, what can merchants expect? This is just an assumption. We'll see how it all pans out. But, Capital One bought Discover because they wanted to get into the acquiring space. So an acquirer is basically Visa, Mastercard, American Express, and Discover. They allow basically merchants to accept these cards and be able to accept credit card payments through the various brands. Capital One in the past, what they've been is they've been an issuer. So they've been pretty much a customer of Visa and Mastercard, and they've been giving out cards to customers, but they've never been on the merchant processing side. So by acquiring Discover, they are now on the merchant processing side. We would call them an issuer and an acquirer, which is basically closed loop. They're doing everything. They're giving people cards and then they're accepting card payments. So, that kind of gives them a lot more power in the industry. Now, again, an assumption, Discover is a high rewards type program with cash back being one of their biggest rewards, whereas Capital One is a high rewards program that's kind of more focused on points and kind of gathering those points. So I think what's going to happen is Capital One is going to merge these two ideas and kind of offer a hybrid model and offer some really, really good big advantages to customers to get, I don't know what they're going to call it, Discover Capital One. Or whatever. So they're gonna, try to capture more of the issuing market by offering better programs, better rewards, and so forth. And what happens to businesses when that happens is the higher the rewards programs, the more expensive it gets to process cards. So one example of this is American Express. So American Express is an issuer and an acquirer. And what they do is they, offer these pretty sick programs for consumers. If you're a frequent traveler, and an American Express Black and all that stuff is awesome. But on the merchant side of things, Amex is really expensive. It can cost 4-5% depending on the reward program behind the Amex to process a card. So if Capital One goes in that direction and starts becoming very consumer centric, then what's going to happen is that they're going to start offering a lot more rewards. They're going to be, trying to capture more of the market on the issuing side by giving people more cards and so on and so forth, so they can use them more, kind of pigeonholing merchants into accepting it, because obviously the more cards they have out there, the more merchants have to accept it because, customers will want to use it. So ultimately, I think this is not a huge win for businesses, because I think it probably will get more expensive to process Discover cards. They may surprise us all and become more of a business-centric card acquirer. Kind of like Visa, MasterCard, where yes, they do focus on getting consumers to get the cards and so forth, but they also have some lower cost products and lower rewards, and that costs a lot less to merchants. So they have kind of the variety there, but Amex is typically high rewards, very consumer centric, and I think Capital One with this acquisition is probably going that direction. So I would expect higher fees in the next year or two from Discover if you accept it on your checkout page.